Hello, I'm Greg Ninnis for interest.co.nz and I'm joined today by Mark Synnott, who's Chief Executive of commercial real estate group Colliers International. Thanks for joining us, Mark.
Oh, no problem.
I see Colliers has turned over last year, just posted its accounts, something north of $70 million. I know you don't release the exact figure for the whole group.
Oh, no, we were only a little bit north. We were about 71.5.
Okay. Where does that put you in the market? Does it make you the biggest commercial real estate company in the country?
Well, it's certainly, we've got, as you're aware, we've got the CBRE figures and the JLL figures and their published figures and published audited figures. So versus those two firms, which are large international players, we're quite a bit bigger, a couple of times bigger than CBRE and 3 times bigger than JLL. But we don't know Bailey's figures.
Right.
So,
and they're the other really big player. Our view would be that, and we don't know this for sure, but we think that Bailey's, in terms of total commercial revenue, commercial property services revenue, that's agency and valuation, property management, etc., would be somewhere between us and CBRE. Okay. But we don't know for certain. All right. And maybe they're bigger than us, but we don't think so. Okay, so you think you're top?
We hope so.
Okay.
but we're happy. We're happy to provide our figures to Bailey's.
Yeah.
But for whatever reason, they're not interested in providing anyone with their figures.
And that's because they're private.
They're private. Yeah. And you know they've got that. That's their prerogative.
Okay. And how does that compare with previous years in terms of your business?
Oh, we had pretty modest growth last year. We sort of grew it by about 3%. And that compares with close to 15% the year before. So we had a massive growth in 2012 off a pretty big base. And because of that, we sort of slowed down a little bit last year. But thankfully, we're experiencing similar growth this year. So year to date, we're 17% ahead of where we were last year. So it's great. It's great growth this year.
So is your business at an all-time high in terms of the amount of business?
Absolutely, in terms of revenue year to date and profitability. Okay. It's going really well at the moment.
And is that across all parts of the business, or some doing better than others?
Some are definitely doing better than others.
Yeah,
Absolutely. Our industrial business in Auckland is the superstar part of our business and is year in, year out. And then the fastest growing part of our business is our corporate solutions business, which they work for tenants and do lease management for tenants, e.g. Vodafone and tenants like that around the country. They've only been on board we've only been in that business for 5 years, but that's our fastest growing part of our business.
Okay. Let's talk about the markets now generally. One of the features I see, some of the economists have been saying that over the last couple of years, a feature of all investment markets around the world, equities, bonds, property, has been high prices and low yields. Has the commercial property market in New Zealand been any different to that? No, that's pretty much the same. In fact, I was just commenting to someone the other day that I've now been in the market for 27 years. So I arrived 2 weeks before the share market crashed and started my career in commercial property. That was a bit of a disaster for the first couple of years, as you can imagine. Yeah, living on baked beans for a while.
Well, pretty much, certainly for the first 3 to 6 months. So my view at the moment is that this is the strongest, most sustainable market uplift that we've experienced. I mean, between the late 80s and through to the mid 90s, it was really tough. I mean, extremely tough. Way tougher than the GFC, which we've experienced recently. And then we sort of started to come out of it towards the late 90s, and then we hit the Asian crisis. So we fell into a bit of a hole for a couple of years. And then we had that rush of blood to the head through the early mid-2000s, and of course we've gone through the GFC. But this is the strongest period of what I would call sustainable growth, because the growth that we had in the early through to mid-2000s, it wasn't sustainable. It was all pumped up with cheap money. Well, sorry, it wasn't cheap money, too much money.
Right.
It wasn't necessarily cheap money, it was too much money.
So why are investors charging into the market now then? What do you think's driving them?
Well, interest rates are very low. So, if they're going to get 5% in the bank, and they can invest in a good commercial property for 7%. And if that property that they're investing in goes up with the rate of inflation or more, well, then they're better off. They've got a higher return, and they've got they're getting some capital gain on their money as well.
So is it coming from any particular sectors, the investors? Where are they coming from, and what sort of people?
You mean where are the buyers coming from? Everywhere. So I would say that every buying sector of the market is strong, with the exception of Australian corporate buyers, because they used to, in the mid-90s, they were our strongest buying sector. Whereas what we've got now is we've got high net worth, sort of local New Zealanders who got through the GFC fine, and they've owned businesses, or they made their money in other ventures. They're actually investing aggressively into commercial property. And a lot of them are at the age and stage where they don't want to put it into another business, which tends to be a lot more risky, and they have to drive and run that business. They're at an age and stage where they want to slow down a little bit, and they want to put their feet up and have a bit of lifestyle and semi-retire. And commercial property provides a good, sustainable, long-term cash flow.
So are some of them cashing up, selling up the business? And
there's definitely that happening in the New Zealand market at the moment. You've got the baby boomers that are at an age and stage where they might have been running the business for 20, 30, 40 years, and their children don't want to necessarily run it. They want to go and do...
They just want the income stream.
They want the income, They want to go and make movies or do something else, or design websites. And so they're saying, I don't want to be in the family business. And there's no clear succession plan. So, and people in their mid to late 60s or going to the 70s, they don't want to be working.
So sort of similar to what's happening in the farming sector in many cases.
Absolutely what's happening in the farming sector. And the farming sector, as you're well aware, requires continuous capital investment. I mean, it really does. All those farms, a lot of the bigger farms are becoming more corporatised. They require a lot of capital. They're basically like big businesses or factories.
And they're becoming more intensive too, and that needs more capital.
Absolutely. And a lot of farmers' children are going to university now, most of them are, and they're pursuing alternative careers. And there's always been that problem in terms of do you give the farm to the oldest son, or how do you actually divvy it up?
Usually with debt to
that's right. So how do you actually do that? And what's happening now is that a lot of farmers' children are saying, well, we want to pursue our own careers, and we want you to sell a farm at some point in time and give us all our equal share each. Because it's interesting, in the old days it was mostly the blokes. The oldest son got the farm, and maybe they paid out the second and third son, and then the girls maybe didn't get anything. So it's equal opportunity now. Everyone wants an equal share.
On the commercial side of things, it's election year. Suddenly, foreign buyers buying up land in New Zealand has hit the headlines. But that might also apply to commercial property. How strong is investment from overseas into New Zealand, the New Zealand commercial property sector?
Very strong, primarily out of Asia. So not out of Australia, which the mid 2000s, that's where that really drove a lot of the yield compression. It's mainly out of Asia now, and it's both corporations and high net worths. And we just sold the old Auckland Star site in Shortland Street, which has been sitting vacant for 20 years, or maybe more.
More, probably, I would think.
It might be going towards 25 now. And we just sold that to some mainland Chinese. They were actually relatively young, and it was a young Chinese guy and his cousin. They bought that recently, and we assume the money has come from China, either through their own ventures or from their parents or whatever. And that was sold in the late 20s, in terms of I think it was about 28 million or something like that. I can get the exact figure for you later, but so that happened recently, and that was one of the highest per square metre rates for anything to be sold in New Zealand in terms of a commercial redevelopment site.
And do you know what their plans are for it?
I imagine it's a mixed-use development. I don't think it'll be a singularly an office
They're not
tower.
going to keep it as a car park, obviously.
Oh, maybe for the short to medium term, maybe.
Okay.
But I think they plan to develop it, and it could be a hotel apartment mix, or it could be an office building with a hotel, because it's quite a big site.
Okay. So the overseas buyers and those from Asia, are they keen on development projects, or are they wanting something that's up and running and they're buying it for the income
There's
stream?
a mix. We just heard as recently as last Friday that one of the other telecom buildings in Victoria Street, one of them has been sold to a syndicator, to Augusta, and the other building has just been, we understand, I haven't had this absolutely confirmed, but it's the market rumour at the moment, it's been sold to a major Chinese corporation. So they'll be buying that for passive income, because they won't be developing that.
Sure.
Contra to that, there are Chinese buyers that are buying stuff to develop. So a lot of land in Albany, and that's been bought by some Chinese interests, and they're looking at doing some residential development on that land.
Okay.
So there's a mix.
All right. So you certainly don't see any signs of a slowdown at this stage.
Never say never. I mean, it's pretty firm at the moment. I wouldn't say it's not too topped out, but we just see it, but we don't think it's got anywhere to go now.
Right.
We think we're basically at or about.
Yields aren't going to go down to 4% or anything.
We don't think so. No, we don't think so. We think that, and we're hoping that we're just going to have a strong, steady, mature market for the next 3 or 4 years,
Right.
because inevitably there's a correction, and it
Yeah.
usually happens at the end of a decade.
Well, of course, when prices are high and yields are low, that's usually a good time to sell. Are many people taking advantage of the current market to do that?
Absolutely. And corporates that own property are looking at the market right now, and we're dealing with one party that's got somewhere between 25 and 30 sites around New Zealand that they own them currently, and they're looking at doing a sale and leaseback on them, because it's a good time to get your capital out, and then their plan is to reinvest that capital back into their business where they can get a higher return.
Yeah.
So,
So
very
a lot
good.
of owner-occupiers selling out, basically.
There are some owner-occupiers selling out and doing sale and leasebacks, yes.
Okay.
And we've had a bit of that happening in the industrial market in Auckland as well, where people bought the property during the GFC and put their business in it,
Yeah.
and bought it extremely well because it was vacant.
Yeah.
And now they're looking at actually getting the capital back out, but they're getting a lot more capital back out than they put in. Because
So timing, second only to location, perhaps. in real
well,
estate.
yeah, I mean, you'd argue timing's everything.
Yeah,
You'd
okay.
actually, it's interesting about that location thing. Our view is population. That's the thing that really drives commercial property.
Yeah.
So if you've got positive population growth, and it's of a reasonable demographic, that's where you get commercial property activity, and that's where you get growth in terms of capital values.
So do you think the drivers for commercial are not too different to what they are for residential in Auckland at the moment?
Well, you've got population, absolutely, and location's always been critical. I'd say they're probably the two key drivers. Your point on timing, that's if you're a buyer or a seller, I mean, that's absolutely critical.
Okay. Outside of Auckland, there's been a lot of discussion recently about how well the provinces are doing.
Yep.
How is it outside of Auckland on commercial property?
Wellington's still relatively flat, but it's better than it was last year.
Okay.
So last year we think they've sort of bottomed out. They obviously had the earthquake and other factors, and we see an improving position in Wellington.
Yeah.
Christchurch.
Why is it improving there?
I think it's like anything. When you get to the bottom, there's only, it's like when you get to the top, there's only one way to go down, and when you get to the bottom, there's only one way to go up. And so people have just are more comfortable. It's a year on from the earthquake, so time heals everything, and people are just more comfortable at. I think the pricing's been reset in Wellington, through the downturn, and people are more comfortable that Wellington's not going to go away, and that there is a future for Wellington. It's just not as strong as perhaps it has been historically.
Okay.
Christchurch is booming, obviously, and that the stuff that's happening in Christchurch now is real. I mean, if you go down, I was down there last week. There's a lot of construction in Christchurch right now.
Where is that happening?
Oh, the major stuff is in the centre of the city.
Okay.
Yeah.
So that's really starting to wind up now.
Absolutely. It's Christchurch is now it's been a big deconstruction site for the last 4 years.
Yeah, it's staggering, isn't it?
Yeah. We're just next month is the 4 year from 4 years, I think, from the first earthquake.
Yeah.
Yeah, and the major one was 3 and a bit years ago, and so it's been deconstruction, now it's construction, and they're building, and it's amazing to go down there and see it.
There is this debate about businesses who moved out to the suburbs.
Yep.
And previously, if they were in town in the centre of Christchurch, rents were relatively inexpensive.
Yeah.
So if you build a new building, you've got to charge new building rents. There's no getting away from that. And there's this debate about whether they're going to be able to put something up that is affordable to.
Well, the interesting thing is that most services businesses in Christchurch, post-earthquake, right-sized. A lot of them shrunk a little bit.
Yeah.
And now the internal economy in Christchurch is booming. So most services businesses are growing and are doing really well. And they obviously became very efficient when they were worried about whether they were going to survive or not, 3 years ago.
Yeah.
So they're very efficient, relatively low cost base, but revenue going up, and they can actually afford to pay a slightly higher rent.
Okay.
So it's an interesting dynamic. We think it's, our business in Christchurch, our agency business is turning over double the revenue of what they turned over prior to the earthquake.
Okay.
To give you a feel for it. And people are becoming more efficient.
Yeah.
So a lot of those buildings that you're talking about, which had relatively inexpensive rents,
they were old and
they weren't necessarily, businesses weren't laid out as efficiently as they could have been.
Yeah.
So,
what do you think the CBD is going to end up being like down there? What's your feeling on that?
Oh, well, I think it'll be a vibrant place. I mean, there's no question about that. There's some fantastic buildings being built.
Yeah.
And there's more retail going into the centre of the city again. But you're going to have to probably. It'll be a real crystal ball 10 years out.
Yeah.
I think if you asked someone who's been through the Christchurch earthquake and has lived there for a long time previous, they'd give you a much better feel for how it's going to end up.
All right. And out in the smaller provincial cities,
so
how's life there? So
if you just sort of the Hamilton and Tauranga region, I mean, they're so integral to Auckland, really, that we're finding that they're starting to have some real growth again, those markets. The most buoyant, but it's a very small market, is probably Queenstown. Okay. But Queenstown sort of, when it goes up, it really goes up rapidly, but especially in the residential side of things. And then it tends to have a pretty sharp major correction. But Queenstown's an interesting market. Our business in Queenstown punches way above its weight in terms of the population base that they've got there. Yeah. We've got quite a big business in Queenstown, so it's bigger than our 3 times the size of our Palmerston North business. But Palmerston North are way smaller than. Way bigger, than Queenstown. Okay, so you don't subscribe to this view that the provinces are dying that's been bandied about, No, I'm just thinking about through our business unit. It's pretty. Dunedin's a pretty tough market because Dunedin is a university-based town, and but we've got a good sustainable business and that's just growing modestly. Yeah. In Dunedin, we got out of Whangarei a few years ago, and unfortunately, our latest sentiment survey in terms of confidence, Whangarei came in as the lowest in New Zealand in terms of economic confidence. So, probably a smart move to get out of Whangarei. But none of these places stay down forever, because they become, if they have been in a downturn, the pricing goes down. They tend to become a pretty cost-effective place for people to move to residentially, or to set up small businesses because the cost of labour is low.
Okay, so that'll inevitably come back up again.
Yeah, and the other thing is that I heard a statement the other day that the Northland is usually the last rural area to boom, and they're showing real signs of growth in Northland at the moment, from the rural side of things. So that will have a positive impact in terms of Whangarei and the economy there.
All right. The debate with the housing market lately has been centring on interest rates. How are commercial property investors viewing the slow rise in interest rates?
Positively, because if you went back 3 to 6 months ago, we thought that interest rates were going to not take off, but there was just going to be steady increases, and the latest signal, I guess, is that they might just level them off a bit.
So they're rising more slowly than
than they were. Exactly. So commercial investors are seeing that as a real positive sign, and they haven't. The slight increases that we've had in interest rates haven't really impacted negatively on yields yet.
Okay, all right. Do you think that could start to happen?
If they were to go up at a higher rate than's been signalled, yes.
All right, very good. Great, thanks for coming in today, Mark.
No problem at all.
And sounds like you might be heading for a bumper year, record year this year.
We certainly hope so.
That's great. Thanks for joining us on interest.co.nz today.